very good afternoon. Hello and welcome to the CNBC-TV18 Mumbai newsroom. I'm Ekta Batra and you're watching Your Stocks this Wednesday afternoon, one day ahead of the interim budget. Well, it's turning out to be a session where we are seeing strong gains come through. We have the Bank Nifty, which is up around 675 odd points. We've got a good advance decline ratio, which has managed to sustain through the trading session. And we've got a couple of numbers from the banking space, like Bank of Baroda, which is reacting positively to its numbers. There's been a gross NPA reduction which has come through. As you can see, the stock is up around 2% at this point in time. Net NPA 2 at 0.7% flat on a sequential basis. We do have a lot to go through in terms of queries. Joining us this afternoon, we have Rajat Bose from rajatbose.com, Parthiv Shah, who's a director at Tracom Stock Brokers, to answer all of the questions that we have this afternoon. Rajat as well as Parthiv, welcome to the show. Well, Rajat, I'm going to just start with you in terms of a quick status check on the technicals of the market. We've seen sustained gains today. We haven't seen really much profit booking or volatility which has taken place on an intraday basis. How would you approach today's trading session, especially going into a big event such as the budget tomorrow?
Good afternoon, Ekta. Thank you for having me. I would say that see, what happened yesterday was due to the India VIX, that is the volatility index, the day prior, that was on Monday, it went up by 13%. And when the volatility index moves by 13%, you would expect at least some kind of a reaction. And that reaction happened yesterday. Today, it is actually 1% down. On the other hand, there had been a fall, but it did not sustain below 21,500, so that is Nifty. So long as the Nifty doesn't fall below 21,500 sustainably, there is not much of a concern. And now what we need to look at is whether the Nifty manages to get past 21,800 with positive sentiments surrounding the budget. I suppose that can happen, at least if not today, definitely tomorrow morning. And Bank Nifty needs to take out another 1,000 points. Only when it crosses 47,000, then it would actually get a lot of bullish traction. Otherwise, it would be range bound. And regarding CNX midcap, SIPs Jindabad, and I mean, it continues the way it has always been.
Okay, yes, absolutely. That point is taken. But we do have a couple of queries which we have for, a lot of the viewers have for us in terms of specific stocks. So let's get going on that. The first question is that Dharmeen Monkey writes to us from New Delhi. He's bought 1,000 shares of Tata Motors at 78 odd rupees in 2021. He wants to know what the long-term view on the stock would be. Well, in any case, he's sitting on a great profit when it comes to Tata Motors. And in fact, the stock is in focus on account of various pieces of news. Its earnings are going to be out in the next couple of days. It's going to be out on Friday. They have announced that they're going to be increasing prices of their passenger vehicles by 0.7% on average from the 1st of Feb as well. And not to mention that the stock is just going from strength to strength. So in that context, what would you recommend, Parthiv?
Good afternoon, Ekta, Rachita, and our viewers. Firstly, heartiest congratulations to the viewer. I think back in 2021, I remember those days when Tata Motors was writing off a lot of its assets. And more importantly, I think the run rate at JLR was pretty tricky. And they were trying to cash break even in terms of the EBITDA at JLR. And today, here we are at the juncture where all the verticals, whether we talk of JLR in terms of the current order book in the luxury car segment, especially the Range Rover segment, they're doing exceedingly well. As a matter of fact, I've been tracking Tata Motors since the last 4 quarters. Each quarter, I think the commentary for the JLR segment is looking very, very upbeat. They are in a position to generate a good amount of cash flows. And probably this is a division where I think despite all the weaknesses in the past and also due to the global macro headwinds, we have seen that there have been lumpiness. But the current run rate, I think, is looking very good. The pipeline is also extremely strong. Also talking about the domestic passenger vehicle segment, this has been a fantastic turnaround story for Tata Motor. They are continuously upping the game in terms of premiumization and launching newer vehicles at a very attractive price point. And they've been garnering good market share in the premium segment, which is where they're focused rather than focusing on the entry-level cars. Even the CV segment has been pretty resilient. No doubt, I think the volume growth has been lacking of late, but we are very upbeat on that because they've done a lot of cost cutting and restructuring, as a result of which we believe that that segment should also do well. And we saw how wonderfully Tata Motors was able to monetize some of its subsidiaries like Tata Technologies. Going ahead, probably the Tata Motor Finance also could be IPO'd, and they have a lot of such hidden assets. We are upbeat on Tata Motors even from here.
Okay, all right. So that's on Tata Motors. While we do talk about Tata Motors, Suzlon Energy has come out with what is a fantastic performance on the bottom line. Revenue is also up around 7.4%, but I think there is an operational beat which has come through for Suzlon. So we'll wait by for the margins to come through. But net profit of around 203 crores versus 78.4 crores year on year. Excellent performance which has come in for Suzlon. We'll wait and see if it indeed is purely operational or whether there's any kind of exceptional which has come through on that one as well. But any view, Rajat, on Tata Motors and the kind of gains that we've seen for this particular stock? Do you think that it would just be a hold in terms of the portfolio?
I would definitely suggest a hold because Tata Motors, since early April last year, it has been going up. There had been a consolidation between, say, July and, say, October. During these 4 months, it was range bound, and again, it has started moving up. And for the last 3 sessions, including today, it is moving up from the levels of close to 800 to current 883. I would suggest a stop loss below 750 on closing price basis, and the investors should continue to hold on.
Okay, all right. Investors should continue to hold on to Tata Motors. Well, let's get in another question now. We have Deepa, who writes to us from Chennai. She holds 300 shares of RailTel, which she's bought, and the buy price is 131 rupees. 300 shares of Prism Johnson, which she's bought at 170. And she has 200 shares of PNB, which is bought at 101 rupees. So she is sitting on a profit for all 3 of these stocks. She wants to know the future prospects of 3 of these investments that she has. Well, Rajat, you go first on this one.
Regarding RailTel, I would say that put a stop loss wherever you are comfortable because the stock has been rising. It is on a tear, and it is already 435 now. If technical stop loss is required, then that would be not earlier than 360. So 360 should be your stop loss from a technical point of view. RailTel continues. It is quite overbought otherwise, but since it is moving up, there is no problem. Regarding Prism Johnson, I would say if it fails to take out 190, then one should book profits or exit the position because in the recent fall, it actually broke its 50-day moving average. Now, if it were to fall below, say, 165, then again, it would become weak. And above 190 on sustainable basis, then it will acquire fresh gumption to move up. Regarding PNB, it's just a hold, buy on dips, do whatever you want to. 124, then 134 to about 140. That is the interim target. And if you can continue, you will see maybe a year down the road, it can even taste 170 to 180 kind of levels.
Okay, well, would you have a quick view on 3 of these stocks on the fundamentals, Parthiv?
Sure, Ekta. I agree with Rajata. I think RailTel at 120, 130 bucks, I think hardly anyone was interested. And all of a sudden, after the tailwinds that we saw in the railway sector, even this company, despite knowing that, they have upped their order book, but still, I think if you see that the run-up has been massive, quoting at around 60 trail PE multiple, which I am not able to justify in this sector. So definitely do some profit-taking here. Prism Johnson also as a company, I think it's a decent integrated home building company. They have a cement division and tiles division, but somehow since last many quarters we have seen that they've not been able to garner good EBITDA margins. The EBITDA margins range in the 5 to 6%. And of late there has been a huge run up in this stock. So probably I also feel that one should take some profits here. Talk about PNB, I think we suggest a hold here because I think the way PSU banks are reporting their numbers, I think they're pretty decent. And our sense is that PNB is still quite undervalued as compared to a lot of its other PSU banking peers. And it's a huge balance sheet and they will definitely do well from here. So hold on to PNB.